Today I want to talk about a strategy that I found pretty much interesting and effective, though it has discussed more than equations of 1 divided by 0. What was that? Try a calculator. But this strategy is proven to date effective, at least to the end of the universe, I believe. Please welcome support and resistance on round numbers. Perhaps it's already some 3rd century thingy, but I want to resurface it with my experience and what I've saw statically. So what is support and resistance? As many of you has already known, support are known as the floor and resistance is known as the roof. When the price reaches this spot, it is very likely to bounce. What about round number? What is round number? Round number are numbers with the zeros at the back, like the 10, 20, 30, 100,000, millions and so on. Okay, I get the basic, but why round numbers? Human natural. I'm unsure about why we human beings are attached to the numbers with the zeros at the back. Probably human are lazy or probably human are trained to make quick decisions on dangerous situations. Whatever the reason it is, statically it shows. Here is the audio book from Binance to better demonstrate you how it works. I recorded this during the Bitcoin crash happened in May 2021. Anyway, the box on the left is the pending order. Orders are made by the mass majority at what price they are looking to buy and sell. The upper box is the pending sell orders. The lower box is the pending buying orders. Take a closer look. The mass majority prefer numbers with more zeros at the back. The more the zeros, the more pending orders it has. Now then, how in the galaxy is this relating to support and resistance? I think it is better to demonstrate you live instead of telling theories. Look, the Bitcoin market came crash after a couple of tweets from the legendary Elon Musk. He goes, Tesla is not looking to allow Bitcoin as a preferable payment for Tesla car. Like, I don't think the Federal Reserve does either. I think he make more money by pumping the market up than he sell his Tesla car. Anyway, stop the drama. The market is bearish as everyone looking to escape the market. Man, I'm impressed whoever control the media. They could manipulate the market sentiment they want just by simply releasing rumors and information on the web. Oh sorry, I'm a little bit off again. So as you see, this thing is going downward, yet a very high volume of pending buys at 33,000, even crazily more at 30,000. I miss recording that part. Now then, take a look how it reacts. As you see, the buy orders are getting eaten up, and there goes the reversals. This is why support works most of the time, especially on round numbers. Take a look at the silver market, which based in US dollars, as most commodities are traded in US dollars, so the round number strategy works here too. Please also note that liquidity or the numbers of players matters too. Here we only highlight the one with greater possibility of a pullback. The pullback mostly occurs only when the market is active. I've also highlighted the round numbers with white lines just in case you can see it clearer. This pump occurred short after the market crash on 9th of March, and it nearly reached $30 of silver per ounce. The buying pressure started to exhaust, then a reversals, and a pullback at this spot. Though I wouldn't consider that as an entry spot, but I will consider more on this few spot. Do you know why? Also, I wouldn't consider trading a pullback at this range. Do you know why? The psychological number are at $20 and $30 where a big volume of pending buy and sell are most likely sitting here. Why? Because spot silver hardly broke the resistance level $30 for the past 9 years. And why I'm more likely to place pending buy orders below $22? Statically, it tells me that more traders, especially long-term traders like the hedge fund and the banks, are more likely to place an order far away from the current market price. Only short-term traders, day traders for example, prefer participate in the market for whatsoever signal given to make small gain, like I'm one of it, who used to but not anymore. So these are where the pressures comes in. The nearer it is, the more likely a pullback will be occur. Okay, I got it now. How can we put this into practice? Well, there are a lot of different trading strategies you can work with, like accumulating trades over the time, but I prefer trading leverage with a stop, so gains can be easily x10, x50. But of course, it doesn't work all the time, so relax. How we gonna trade is simply place a pending buy order at this level with a small stop loss. It could be 10 pips or 20 pips, then the take profit could be like 100 pips, 200 pips, and so on. Or if you are some daredevil, you can go with 1000 pips, or you can take it out manually. Or set a goal on first TP, second TP, and so on, then wait patiently. Now, 21, 22, 28, and 29 are where small pending orders are waiting to be filled. You can trade for pullback here, but if you're about to trade at this level, don't go big, because the bigger orders are at 20 and 30. So if you are trading at 22, you may go for smaller positions like $10. As it goes steeper, you can bet like $20 on 21, then $50 on 20. That's basically how it works. This strategy works best with an order book like the Bitcoin clip we have shown earlier, so that you're able to tell where most of the buyer and sellers are waiting, the market sentiment, and so on. But due to the nature that Forex trading are done on the mass scales, only bank and a few ECN brokers are allowed to access this information. I found an order book indicator for MT4 from FXSSI, but I'm not sure how accurate it is. Some reviews says that indicators only cover a fraction of the trader. Anyway, this is for the EUR/USD chart. The indicator is on, and this is the order book graph. As presented, upper left is the sell limit, upper right is the buy stop, lower left is the sell stop, and lower right is the buy limit. Repeat the point we talked about earlier. I'm trying to place two lines. You be the judge. Okay, this will be the end of the video. Thanks for watching. See you another time.